Okay. Okay, we're live. Dope stuff. All right, so let's just quickly go over the trade from yesterday. We had a break above this previous area of structure. We had a massive shift in market momentum. Price broke through the daily zone. Live. Dope stuff. All right, so let's just quickly go over the trade. So the trade from yesterday, we had a break retest of that 14,900. And then overnight, I was expecting that pullback. I was even expecting a deeper pullback down here to 872. But we just had a double bottom retest at the 88.6 and it finally moved. This is what I really wanted to cover with you guys. So let's look at how long this trade actually took to play out. Because we were watching this. We were watching this yesterday when I believe this is the first trade that we took was this candle. So it was at like 920 something. Ended up getting that push up. And then we had this entire area of consolidation all day. If we look at this on the 4 hour, let's count these up. So while the market was dropping, we had 1, 2, 3, 4, 5, 6, and then 7. 7 times 4, 28. So about 28 hours for this trade to play out. So a lot of folks, they'll be in a trade for about 20 minutes and automatically close because the market's not doing what they want. Maybe it's consolidating too much. That's why you really have to trust your analysis and you have to trust your strategy. Because if you don't, you're going to always close prematurely. So hopefully that makes sense for a lot of y'all. Some of you were on the stream yesterday, and maybe you guys closed prematurely. Maybe some of you guys closed just out of... Now, if your trading plan sets to close, that's not who I'm talking about, right? Because you followed your plan, you did everything you were supposed to do. It's mostly for the folks that just didn't have the conviction and closed because of some emotional reason, like, you know, maybe you didn't want to hold the drawdown, or you didn't want to hold through all the wicks, or maybe it was a patience, whatever it might be. So are there some potential re-entry opportunities? Look, if it's 11 a.m., which is typically like, I'll stop trading at 11:30 a.m. Eastern time. That's usually when I'm completely off the charts. If the market is moving this aggressively, this early in the session, chances are that it's going to consolidate throughout that middle period. Like you guys know, from 11:30 to about 2 p.m., a lot of consolidation happens, a lot of up and down, a lot of back and forth, a lot of low volatility, or not low volatility, low volume, to kind of entice traders to keep forcing these trades. And then all of a sudden around 2, 3, 4 p.m., we have another massive liquidity push. So right now, am I expecting a massive retest, especially because of the time that we're trading in? Probably not. This might be a tomorrow kind of move, but I'll show you guys options regardless. If I remove everything, I want you guys to pay attention to structure always. So we have a structural high here, swing high, and swing low. So if I draw my fib from the very top to the bottom to try to assess how far up the range that we've retested, I can clearly see here that we're almost at the 88.6. So we're at the 78, we're breaking through. Have we had a rejection? No rejections. Whenever price doesn't respect a specific fib level, here's what I see in my mind. It's going to go a little bit up, and then it's going to do that reaction. Everyone's going to think that that's the drop. Then the market will actually hit the 88.6, and that's where we could see a real liquidation. So is there going to be a short-term sell-off here at the 78 based off of the fact that we haven't seen a rejection yet? More than likely, the market will continue to push through and then come wicking back down. So there's an opportunity here. The 88.6, I would say, is always the best opportunity. So let's call it pretty close to 15,200. 15,200. That would be a pretty good area to start to see some rejections. So I'll actually mark that off on my chart here, 15,200. And let's see if I can line it up with price action here. There's a much more liquid zone right here at 255. So that's the previous highs. And then we'll have the 88 zone right here. You guys can see this is actually pretty straightforward. We have discounts right here and premiums right up here. So as the market is pushing up and we get into the premium zone, this is where we would be looking to close out of our buys or start looking for some potential retests from that level. How we can tell if the market is very aggressive is if we don't stop here and instead break through these highs. And if we break through those highs, very straightforward, we look for the retest back inside the range, and then we continue that trend to the upside. So very straightforward. We have those levels on the higher time frames. The trade from yesterday is still running. And yeah, I really just couldn't imagine a better trade than this. Still holding the entry from yesterday. Look at this on the 4 hour here. Oh no, we'll go to the 1 hour. Yeah, these wicks were troublesome, but that's why I had to catch the very bottom. And the only way I caught this is I put a buy limit here, because as the market continued to reject, I was like, okay, that's obviously the biggest discounted price that we could enter at. And so instead of trying to manually time it and try to enter at that price, I set a buy limit. Market came into that zone. I actually set it a little bit higher, but thankfully it entered me at the right price. And then market opened yesterday during Tokyo with a gap. We came back in to retest the gap as support and then pushed. During London, what we saw is a beautiful retracement here to the body of these candles, the body of the daily lows from yesterday. This is where the market was right here yesterday before New York session. If you look at where the market retested today, same exact price. Okay, there are no coincidences in trading. Well, there's some, but not in this case. If you see a pattern happening consistently, that's a pattern trusted. Now, you guys saw I had 30 lots on here yesterday. I had 2 positions. Once the market pushed up to these TPs, I was closing that first position. I held the second, and then as I woke up this morning and saw it breaking levels, I just kept shaving positions off. And this is kind of what I prefer to do is I can, one standard lot size right here. So we have 3 lots running. One standard lot size is about 250. Now, percentage-wise, that's less than 1%. Hold on. That's 0.2% or something. So like, regardless of the decision I make, this is not consequential to the account. Now, let's say I hold this thing to TP2 and this doubles. Now we're getting pretty close. Now we're at almost half or a 0.25% return on that trade alone. 0.25%, 3/4. So it's almost 1% just on this runner. If this thing continues to run and hit my 200 target, I will double the money and I'll essentially have made a cool 1% just on the running position. All right, last but not least, where could the market retest for buys? That's the most important question here. Are we going to get it during this session, guys? Probably not. If we do, it'll be about 3 p.m. So personally, I'm not looking to enter random trades at this price. More than likely, I'll just let the market come back to the 14,980 level, and then we can go long from here. You guys can see daily support, turn resistance, price breaks above, breaks back above, and now we're fully above that buy zone. So we're just going to be looking for that retest back in to 15,000 or maybe even a little bit lower, 14,980, and then we'll just have a continuation of those longs. Now, I know some of you guys are thinking, Roy, why don't we sell at the 88.6? To be honest, I don't see why not. I'll probably be taking both. I'll probably be taking the short position here at the 886, and then I'll take a long position in continuation of that momentum. All right, how we doing so far? Can you explain how today's news affects the markets? What news is going into? We got flash manufacturing, not too big of a hit. New home sales, this is important. How the fuck is this thing still up? Something about this just doesn't make sense. Well, because this is the annualized number. But on a month-by-month basis, there isn't a lot of sales happening. Over 90, or let's call it close to 90% of the country has a fixed rate mortgage, which means that a lot of us ended up getting a mortgage when interest rates were really low, 3-4%, maybe even lower. If you got it lower than 3%, hallelujah. So none of none of the folks that got an interest rate when things were low are about to sell their house anytime soon, because the cost of going somewhere else and buying a new home is way too high. Not because of the home prices, but obviously because of the interest rates making the monthly payment way too expensive. So because of that, the amount of people selling their homes is going to be at an all-time low, which means the only way to get houses on the market is to create new construction. And new construction right now is getting hit because obviously people aren't buying houses. So I think that this new home sales is a little bit odd to me. But obviously we need to look at the rest of the data to see what's going on here. It seems like there's still home sales happening. I'm not sure who's really responsible for these home sales, but I guess we'll find out if I go through and look at a bit more detail. The BRICS Summit is something I'm more interested in. I've been getting calls and texts about this all day. Okay, well, let's just look at that. There's a BRICS Summit happening, and for some reason, all the money is ending up in the US stock market. The XY hasn't gotten hammered, but seems like folks are buying stocks. Seems like folks are buying gold. I'm waiting for crypto to turn back up, right? Bitcoin should be popping up here very soon. Yeah, personally, I don't really know what's happening. I don't want to say I know, but I don't really think that there's anything consequential happening on the BRICS side. Now, obviously, they are headed in a direction that's extremely dangerous. But I personally don't think that they're as big of a threat as everyone's making them out to be. And yeah, I have a good feeling that the US does not mobilize until it's go time, until there's an emergency, until there's a Pearl Harbor, until there's something that's uniting the country in a massive way. And so right now, the BRICS threat is not big enough for the country to mobilize. At some point, I believe it will be, maybe 4, 5, 6, 7 years from now. And that's where we're going to have a reckoning moment and potentially a second Bretton Woods. Okay, this is the biggest story of the next 10, 15 years. All the shit that you guys see, all the weird stuff that we've been seeing for the past few years. Why is there so much weird stuff? Like just odd things happening that are not explainable, too many coincidences, governments lying, all these things. There's a massive power grab, like hungry hippo. All right, US has had global dominance for over 75 years. I think the rest of the world is not happy with that standard because it doesn't help them as much as it helps us. And I think at this point, there's a massive shift away from the dollar and towards some alternatives. And I think that if you don't understand this shift, you're going to be in a world of trouble, people, because this is going to affect domestic life here in America as well. Tax rates will go up just to service all the debt that we've been creating, all the money we printed. We got to pay it back. And who's going to pay it back? It's going to be our generation. So there are genuine dangers with the BRICS currency that's being posed. There are genuine holes in the US economic system that need to get addressed. And yeah, if you guys understand how this world is shifting, you'll buy the right assets, you'll hold the right investments, you'll move to the right countries, you won't allow certain laws to affect you because you're able to navigate around them. And everyone's asking how rich people all seem to know not to pay taxes and all seem to know where to move and all seem to know where to put their money to grow. They kept their eye on the ball. You know, decade after decade, they know exactly what the game setup is right now, and they're just putting their money exactly where it should be. And so I hope the same for all of you. Get educated and take advantage of this next however many years of growth. So there's unemployment news tomorrow. There's always unemployment news. If you guys are watching this on YouTube, please make sure to hit a like and subscribe if you haven't already. Helps us keep doing these streams. It helps us keep providing as much value as possible. Welcome if this is your first stream. My name is Roy Dunya. I'm a full-time day trader and founder of Chart Addicts, the #1 coaching and educational service for traders. Make sure you guys drop that like. Yes, sir. All right, so we talked about gold yesterday, how we had the retest back inside the range. We had a retest back inside the range and a push up. And I said that if the market closes like this on the 4-hour, this was actually on the stream yesterday for all of you to check, said if the market closes like this on the 4-hour and stays above the 95 zone, there's a chance that we can continue pushing, which is exactly what happened. Perfect timing with the DXY retracement. And so this to me is very straightforward. Same with Euro USD longs right here. I know this seems very risky for folks, but if the daily closes above the support level, and ideally above this extension, so 1.084 or 1.085, sorry. We close above that on the daily or even on the 4-hour. That's going to be our opportunity to go long. On the 4-hour, I actually love this strategy where we push above the previous high, come back to retest, and continue. Does not get easier than this. This is one of the easiest trades possible. All right, but it's conditional. Obviously, you have to have a shift back in momentum, break above the previous area of local structure, have that higher low pullback at the at the daily lows, and then catch the continuation up to 1.1. Do you mind explaining how to calculate trading pairs with spreads? Not really sure what the purpose of that question is, or not really sure what you mean by that question. Strongly agree with what Roy just said. The BRICS currency, yeah, for sure. I hope you were talking about the BRICS currency. Roy, brother, what's your opinion? Would you move from Africa to America if you were in Africa? Well, I mean, it depends on which country, right? If I lived in, let's say, Nigeria, South Africa, Ghana, Ethiopia, or if I lived in those countries, probably not, because the amount of growth that you have ahead of you is so massive. You don't want to leave just as shit is starting to get better. Now, if I lived in Tanzania, if I lived in Uganda, if I lived, yeah, maybe I would. Okay. So obviously it just depends on what you want. But personally, I would just look at the potential for growth and just move wherever there's opportunity. What's your opinion on the price action this month on the indices? Every summer, same exact thing. Every single summer, same thing. People make money first half of the year. They give it all back in the summer because the volatility is being ran by algorithms as the traders are on vacation. Even though it's like, even right now, traders aren't really pushing the buttons. It's like they're making decision to move orders, but there's a lot of algorithms that dictate how, when, where these orders are placed. So long story short, summer volatility, always bullshit. The number one thing I keep telling folks is protect your chips in the summer so that when the winter and fall volatility comes back, you still have your funded account. You haven't blown all your funds. And yeah. He said, what the fuck is this Inception? It's called a YouTube stream, and you're watching my screen, watching your screen, watching my screen. So maybe, yeah, it is Inception. What am I reading here? Oh, hell no. All right, let me close up my window, guys. Some fresh air is great, but a lot of shit happening outside. People moving around. Let me just go. Okay, dope. You might explain how to, like, for example, with Bitcoin and USD Mexican, how do they have spreads where your entry isn't right at the actual price? Brother, when you're using a Forex broker, they are maliciously trying to get money from you by any means necessary. When you're trading high-risk instruments like the miners, like exotic pairs, or like cryptocurrency, they're going to use their two most malicious techniques. Number one is spread. So when you enter the trade, the distance between where you wanted to enter, like the price that you were quoted and the where you actually entered, is off. So you're going to get shitty execution, which automatically puts you in drawdown every single time. And then the more malicious one, which is slippage, where it's completely unexplainable, and they'll just literally enter you wherever the fuck they want. Slippage means that if we wanted to enter a short position right now, they'll enter it down here, a completely different price. There is no way to calculate slippage. It's a completely manipulative tactic, and the brokers can do it at their own discretion. What I try to do is, if I avoid trading around news times, then typically I don't experience slippage. If you guys are experiencing high spreads and slippage in the middle of a session with no news, like there's no big news. I'm not talking about some like one data print from another country. I'm talking about like if there's no NFP, CPI, unemployment, if there's no real news, it's the middle of a trading session, not an overlap, and you're getting hit with slippage and spreads, screen record that shit, send it to the broker and have them fix it. And if they refuse to, call them out. Like when I was calling out the Funded Trader and some of these other platforms, not because they were like, the rest of the trading experience on the platforms was awesome. But it's like, bro, the second I get hit with slippage at 11 a.m. with no news, and I'm in fucking $2,000 in drawdown, haven't even let the trade do anything yet, and now the market moving against my position is putting me at a risk of the account. Bro, that's fucking criminal. So yeah, there really is no way. That's why I don't trade cryptos on Forex. If you really want to trade cryptos, there's other options. Like you can just buy and trade cryptos on spot, which means no leverage, no margin. Get your ass on Coinbase or whatever and just buy that thing. If you buy it low enough, you can make 5, 6, 7, 8, 9, 10x. That's my take. Now, the only time I would open a margin account to trade crypto is like exactly what happened in 2020. Right? If Bitcoin hits the absolute floor and there's nothing under that, it's done. Yeah, that's when I'll pull out a fucking MetaTrader account and just margin trade cryptos. All right, y'all. Yeah, there ain't no trades happening in the session. Typically on Wednesdays, when you get to the charts and you see everything's already moved, the number, like the biggest feeling that I get naturally is, fuck, I missed the move. Let me just try to find something so I can walk away with some money. That's where my natural instinct goes. And I explain this in the advanced coaching program a lot because we always talk about mindset being the most important, but people don't really understand what trading psychology is. It's not patience and strength and all this bullshit. No. You got to know two very important things when it comes to mindset. Number one is when to walk away. Like mindset doesn't really come in until you're in profits. That's how I think. If you're losing and you like get over losing, that's what you're supposed to do. It's like trauma response. You can't just keep seeing the same thing and just being upset all the time. It's like eventually, yeah, you're gonna learn to get over it. So being okay with walking away, I think, is one of the most important skills. I think second would probably be, just knowing when not to trade. Like, so in the ACP program, this is the point I was trying to make, is we talk about causation and we talk about your emotional response versus your behavior. So a lot of people tell me like, yo, but I felt like the market was going to keep going and I had this FOMO. Now, the four most important feelings, this is like the four fears of trading. It's why everybody makes trading mistakes. There's only four reasons. Scared to lose money, scared to be wrong, scared to, what's the other ones? Fear of failure, fear of being wrong, fear of losing money, and fuck, I had this, I don't know why I'm skipping on it right now. You guys know I talk about the four F's all. Does anyone remember the fourth F? It's been a long fucking night. Fear of being wrong, fear of losing money, fear of leaving money on the table. So there's a fear of missing out, fear of being wrong, fear of losing money, and fear of leaving money on the table. These are the main roots of all trading mistakes. So you're looking at a trade, you want to close or you want to hold. Well, if I hold it, I can make more money, but if I close it, I can make guaranteed money. So like the decisions, hold on, let me read this. That's what I'm talking about. Yeah, so fear of missing out, et cetera, et cetera. I'm trying to remember what the point of that. I'm pretty sure I was answering someone's question. Oh yeah, we're talking about walking away. ACP, guys, look, I slept at 4 a.m. last night and I woke up at 8 to do my morning routine. Not recommended. But obviously, the way that my daily schedule works is that even if I sleep late, I have a set time that I have to wake up and do my job. Otherwise, I'm not going to, like, I would rather have 2 hours of sleep and go through my morning routine than not, than get 8 hours of sleep, but potentially miss my morning routine. So letting you guys know, your boy is a little slow today, but not slow enough to fall for any of these markets tricks. Let me bring it back to the main point so I can tie this all together. The emotional response that you first feel, whether you feel like you're missing a trade, whether you feel like you're leaving money on the table, whether you feel concerned about losing money, whether you feel concerned about being wrong, those are going to be natural responses. And I hate to break it to some of y'all, some of them just don't go away. It depends on your personality. It's like I'm trading in front of hundreds and hundreds of people, right? And then thousands, maybe tens of thousands will watch this recording after. I'm putting my entire reputation and the reputation of the company I've spent 5 years building on the line. And when I do these streams. So naturally, there's a sense of emotion when I go to make a decision that is going to be there, just a little bit of that emotion. How I behave is the most important thing. What I do with that emotion is the only thing that makes or breaks me as a trader. The difference between you and another trader, because you guys both are going to be looking at the chart flying right now, being like, God, I want to get in, I want to get in. Somebody is chasing a 5-minute retest and somebody is waiting patiently for the 88.6. The 5-minute retest person is going to win the first trade. And they're going to be like, man, that dude Roy doesn't know what he's talking about. I got a 5-minute retest, the market's still going. And then they'll do it again. And then they'll do it again right here at the 88.6. And that's when the whole trade goes bust. And they're like, oh, okay, it was just one loss. Let me just try to buy it again because it's been working for me. And it just keeps dropping. And we were here at the 88.6. We didn't take the 5 trades. We didn't win the first 3, lose the next 2. We just took the 1 position. So the difference is people who interpret that emotion differently and do a different behavior than you are going to have different results. It's not the emotional response that makes or breaks the trader or the differentiating factor between an amateur and a professional. Professional is managing $100 million, puts on a position. He's got 5% exposure. That's $5 million. Now he's using leverage. So he really has 25, 30 mil of exposure on the charts. He's going to have some sense of emotion unless the guy's a complete psychopath, right? But he's a professional. He understands his system. It's not like, oh my God, I'm in drawdown, I got to close. He's like, oh my God, I'm in drawdown. Let me look at my systems and make sure everything is still valid. Okay, structure is holding. The price did break above these previous areas of support and resistance, and the trend is still intact. Therefore, the trade is still valid. Hold it. How you behave under high stress and in these emotional situations makes or breaks you as a trader. So some of you guys are trying to do meditation, cold showers, listening to audios to try to get rid of the emotions, and you can't get rid of them, and now you're frustrated. Damn, bro, I feel like I should be way ahead of where I'm at now. Everyone says that trading is easy. The only people I heard say trading is easy are demo traders. These are people with marketing accounts from a broker trading fake money, talking about the money's not real. The money doesn't matter. Oh, shut the fuck up. Of course the fucking money is real. All right, they're making $1 million a month off of broker commissions. They're signing people up on their broker. They have fake broker money. And all the advice they're giving is like this cliche, like, oh, motherfucker, in what world does money not matter? Like, your bills get paid by imaginary, like, I don't know, bro. I don't know what these people are thinking. Long story short, the emotions are there. If trading is easy for you, chances are you're either at that point where you're very experienced, and easy might not be the right word. I would say simple. Like, you don't think about it. Okay? When your body knows how to do the action better than your mind does, it feels easy. Does it make it easy? No, because you still have to put your body in the right position to access that intuitive memory so that you don't have to think about the shit. Just fucking do it. But if you're like tired, or if your energy is off, or if you're fighting with somebody, you're not going to be able to access that memory bank and just see the opportunity to snipe it. So for the rest of your life, for the rest of your time, you have to work on yourself, not to get rid of the emotions or whatever everyone's trying to do, but to understand them so that you can recognize them when they come up, so that you can behave differently under the same circumstances. And that's what growth is. It's a different behavior when presented the same circumstance. Insanity is doing the same thing over and over again and expecting a different result. Growth is doing a different thing when presented with the same circumstances to get a different result. That's growth. Tip for keep my trade running till take profit. There's too many factors that go into that question, brother. Like, what's your trading plan? What's your strategy? Is it high risk, high reward, or is it high win rate? What is your goal? Are you trading for growth or for income? Let's look at your data. And based on your data, based on the last 30 trades, which would have made you more money, closing or holding? And only after we've seen the numbers themselves, and I can really look at this in a quantifiable way, I can give you a solid answer. Hey, do this, and it will result in better conditions for your trading. And do you look at exotics? No, but if you're in South Florida and have some exotics, let's fucking hit your boy up. Side note. Big side note. Heard so would have to just be wide stops and lower leverage. Makes sense. Yeah, brother. Chase, I don't know what to tell you, bro. I've lost more money trading cryptos on these Forex brokers than just about anything else. And it wasn't like little money. Like back in the day, I would spend months building a $1,000 account, and it'd be sitting at like 9,000. And I'm like, fuck, okay, I'm just going to keep one trade at a time. And then I'll take a Bitcoin trade. The 9,000 is back at 4,000. Now I'm using the same similar risk strategy as I would on all the other pairs, but it's just the volatility, the spread, the slippage, the commissions, everything involved makes it unattractive for me to trade on those platforms. And so if in the next 6 months you are struggling hard with your trading and you're losing money trading cryptocurrencies on net, like maybe you make some money sometimes, but just overall add it all up and you're negative, I would just very much recommend to you, just don't fucking trade them on the Forex brokers. A lot of people, when I give them advice, they'll typically say, all right, so what you're telling me is I should go master trading cryptos. Because obviously if I'm losing all the time, I just got to learn more about it. What's even easier is just don't fucking trade them. Tell people like, you're losing all your money on Fridays. Okay, sucks. You make money all week, you give it all back on Fridays. I'll tell somebody, well, wouldn't it make sense to stop trading Fridays? They're like, no, I want you to help me understand how I can trade Fridays and how to master Friday trading. I'm like, all right, so you have a strategy, it works, you've built the resilience, the memory for that strategy. And instead of just doing that, making money, and then taking a day off on Friday, you want me to go through the 6-month journey with you to help you master Friday trading? How does that make any fucking sense? This is where I get very frustrated with traders, because I mean, I've been there. I'm arrogant as fuck, right? I'm a stubborn motherfucker. I get it. But you can't be so stubborn that you're willing to lose money for 6 months. Like, there's just no amount of stubbornness. That's fucking stupid, right? Look at your trade results, and if you realize all my money is going on gold, that doesn't mean let me go watch 30 gold videos on YouTube so I can become a master and see the intergap, the intersession gap spread liquidity pool. Motherfucker, stop trading gold. That's all I had to do. I was making $4 grand a week and just giving it all back on 2 fucking gold trades. Because the biggest trade I ever had was on gold, and my relationship with that pair was me trying to chase that original high. The initial high of me making 12 grand on gold, and that was the one that's going to save my life. I saw that 12K on the screen. I said, this is going to be 100K one day. And I'm just chasing this high of gold is going to take me to the moon. And all I'm doing is giving back every fucking dime I ever made on SPX back in the day, because that's what I used to trade before NASDAQ. And so we hired a phenomenal gold trader on the team. Okay, who remembers Troy Knight? I'm studying every fucking liquidity pool. I'm studying every zone, the treasure map, right? Still losing money. I'm break even, but not really where we're supposed to be, because I'm still giving back all the money on gold. So eventually I was like, why don't I just stop trading gold? The month I stopped trading gold, everything in my life changed. Trading got so effortless because I would make money and I'm like, all right, yeah, SPX 500, I made money, that's too easy. Let me go do gold now. I was like, bro, what the fuck was I doing the whole time? If it was so easy, why don't I just keep doing that? It's like, oh yeah, but that's just, it's not good enough, it's just not enough. Your brain has a way of convincing you that if something's too easy, especially when it comes to trading, that it's just not going to work. It's a scam. Something's wrong with it. Sometimes it is too easy. All right. The market's either going to break through or it's not. Now, y'all can dress it up and tell me about every fucking liquidity zone and every fair value gap and every OBE and every TDE and every 4PF and every fucking, all the CIA, all the fucking acronyms. And I'm just going to come back and tell you, yeah, I mean, it either will or it won't. Who's going to be more at peace when we walk away? It either will break the zone or it won't. Now, if those are my 2 options, I better make a choice right now based on that possibility. If I'm scared the market's going to reverse on me, I better fucking close enough of my position to stop being scared. If I'm concerned the market's going to come back and hit my break even and I'm kind of on edge about that, I better fucking make the choice. I better rip that Band-Aid off right now. Close enough of the position that whatever is left running, you have no attachment to. Like right now, I got these 3 lots. I had fucking 30 lots open when we first took this trade. I only have 3 lots open now. Am I involved in these 3 lots in any way, shape, or form? The answer is no. Now, some people will be like, oh, bro, fuck, I should have held the 30 lots. If I held the 30 lots, this would be, $1 million, whatever. Yeah, and I want to fuck Halle Berry. We're going to talk about hypotheticals here. I make decisions based on risk management. Is there a risk the market could reverse all the way back and hit my entry? Yes, that's how markets work. They can come back whenever. Okay, if that's a reality, how pissed off would I be if I let this winner turn to a loser? Very mad. What if I closed early and the market keeps going? I'll be mad, but nowhere near as mad as if I let the winner turn to a loser. This is how I make decisions. Which one's going to piss me off more? Closing right now and watching it run for another million pips, or holding it and it reverses all the way back to my entry and I let a winner turn to a loser? Everybody's answer is going to be different, by the way. It's based on your own personality. It's one of the first things I ask. They'll be like, boy, should I hold or should I close? And I ask them that question. Which one is going to piss you off more? Because when you're emotional, you're going to want to get back in the markets and revenge trade or make some kind of trading mistake. So I always do it to minimize regret and to minimize that emotional response. I closed it not because I wanted to close, because I didn't think it was going to keep going. Obviously, I thought it was going to keep going. That's why I took the fucking trade. I trade in the direction of the trend. But I don't make decisions based on greed. I make them based on what I can afford to lose and smarter decisions. And that's just where we're at. So speaking of which, I'm going to close just to kind of feel like I made some money today. Obviously, I did close some partial profits, but that trade is going to keep running. Perfect entry, so I'm not going to close the full thing. This would be a shame to close an entry that's good. All right. How much do I have running? About $500. Nothing too crazy, about 0.25%. If this thing keeps running and I just don't close, what if there's massive upside here? If there's massive upside, even with two standards, this thing is going to go up to 1% or 2% return. That's significant. All right, y'all. Happy and safe trading today. I don't see a lot of other opportunities for re-entries. 15,200 potential short opportunities. Don't overstay your welcome, right? You're going to see that little dip. Once you see that little dip, take your fucking money. All right, move your stops to break even. Whatever happens next is great. We are trading against that bullish momentum, and so you do not want to overstay your welcome. I promise you this. So we're going to see that retest, and then we can buy again. So there's buys and sells. Any questions, comments, concerns before we hop off? Let me know. If you guys are on YouTube, make sure to hit that like before you hop off. There's about 65 people on YouTube watching and only 15 likes. That's criminal, people. How's that even possible? How's that even possible? Chart Addicts members, we're about 7 days away from the 31st deadline. The deadline for Chart Addicts 2.0, if you have not made the commitment to transition over. Now, you don't have to be a part of the, I say this, you don't have to be a part of the August round because obviously deadline is missed. But if you guys want to secure with your Chart Addicts discount, make sure to do so before the 31st. We can lock you in for the September coaching or the October coaching, depending on your schedule. But if you guys have not indicated to us whether you want to stick around or not, on the 31st, we will be kicking everyone out of the group chats except for the lifetime members. You guys know who you are, my day ones, right? There's members here that have been with us since before we even had a website, people. Me and O had a group chat on Telegram, sending out better free signals than everybody was charging for. Like our paid signal or our free signals were better than their paid signals. So naturally the group grew. We had no website and we had a PayPal account. And people were sending us money to PayPal with no guarantee, no contract, no nothing. That's real trust. I don't trust anybody like that. And so because of that, we got lifetime members. Those folks are going to be in Chart Addicts 2.0 without having to go through the ACP program because obviously they are already gone through it. Folks who have already gone through ACP and CA certified, you guys have that fast track into the program. And everybody else, we would love to have you guys part of Chart Addicts 2.0, but we made that commitment not to allow just randoms into the group anymore. Because I want to make sure the people who are around us are the most motivated, are the most dedicated to trading. They have a long-term mindset. They have the proper expectations of what trading is. Because if you're hanging around a bunch of gamblers who don't really understand trading, it's going to rub off on you. If you're hanging around people that set a higher standard, when you say some dumb shit like, bro, man, I bet like half the account on that thing, like I almost blew the account, right? Your whack friends are going to laugh along with you, right? Good friends and good traders are going to look at you crazy when you say stupid shit like that. Because there's a higher standard. Like people like us don't even do that. It's like you don't do drugs, right? Let's say you don't do crack and you're hanging around crack addicts. And you're like, or let's say that you do crack. Okay, just take a wild imagination. You're hanging around people that like us that would just never touch that shit. You're not going to sit there like this guy's not going to convince you into their argument. They're not going to be like, bro, trust me, it's amazing. You guys are missing out. You're going to look at your boys and you look back at this guy and be like, bro, we don't fucking do that. People like us don't even do that shit. That's called an identity. You have built a self-identity with standards around it. It's the same with breaking trading rules. I'm around so many great people now that I can't say, oh, bro, ha, 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 I over-leveraged. Oh, ha, 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 I blew my account, ha, ha. There's nothing fucking funny about that. It's goddamn embarrassing. I'm around people who will hold me to that higher standard. And can you guys start to understand how valuable that accountability can be? Most trading errors happen. You look over your shoulder, ain't nobody there. Nobody gives a fuck. It's you and your account. Oh, I take an extra couple trades, ain't no big deal. So accountability is that factor that's like, fuck, I gotta show Coach Roy, my MetaTrader, on tomorrow's session. Let me not fucking take these 3 extra trades. I know for a fact I'm not going to be able to explain it, and I know Roy's going to be on my ass. I get you. All right, ladies, there's about 50 people on the YouTube, guys. Just take out your phone and hit the like button. This ain't rocket surgery. Come on now. What's good, Roy? Is there anywhere else where I can message you to ask a psychology question? Since there's a word limit here. To be honest, no, brother. You got one shot. You got me here. I'm not just like around giving my time and energy away to people. I'll be honest, you probably wasted your chance to ask that question by asking if you could ask a question. You're in a chat box on a stream. It's the perfect place to ask a question. It might be a little long, but just trust, I'll answer. All right, I'm not one of these lazy folks. All right, people, I have a call in 1 minute. I really have to hop off. They're in the UK, so I want to make sure I don't leave them waiting. Happy and safe trading. Yesterday's trade was amazing. What did it show us? I'm still making money from a trade I took yesterday. Okay, so everybody feels like the only way to be productive is to trade every single day, to take a trade every single day. My decision to not get in and not blow my money is the reason why I'm going to end the week profitable. So sometimes not trading is the best trading strategy. Hope you guys learned something from me about kind of like discipline, not being too impulsive with your decisions, having a set plan of action, having standards. He said, that is a shame that you have to keep asking to hit the like button. Well, I get it. Trust me. I called the most fire trade yesterday. People wouldn't hit the like button. I have to do it only because look at our fucking views. 45 people watching. Now, I love every single last one of the 45 people that are watching, but you guys know that I am way too fucking skilled at this game to only have an audience of 45, especially when there's some numbnuts out there with the great camera, with the lighting and the woo-woo, and they're getting all these views, but they can't trade themselves out of a paper bag. So yeah, when I say hit the like button, that's because I'm trying to get this shit out to other people who hate me, people who like me, whatever it is. If you hate me, good, get on the stream. Talk mad shit on the stream. You're going to watch me. You're going to sit there and watch me make money. So I really want as many people as possible on these streams, haters, people who are going to be like, oh, that strategy doesn't work. I want all of them. I want everybody to come and see us win. This is a public spectacle right now. If it wasn't, I would just fucking turn off the streams and trade by myself. It is. Gold is not an easy pair. Is gold hard to trade? Whatever belief, this is the last thing I'm going to say. This supersedes trading. Whatever belief that you want to hold is going to become true. Okay, it's not the truth, but it's true to you. It's true enough. So be very careful about what beliefs you guys hold. When you tell yourself, yes, gold is a hard pair to trade, is that true? No, because the word hard is subjective. So clearly there's no objective definition of hard versus easy. So then you are ascribing a definition of this thing. Does this belief serve you? Trading gold is hard. Well, no, because it's going to make it harder than it has to be. Whenever you see something, you're like, that's too easy. It can't be that easy. Only hold beliefs in your mind that serve you towards your better purpose. When I tell folks that, I never tell people trading is easy, but I tell people trading is simple. And I mean that. That's a belief that I genuinely mean. If I start telling myself, man, trading is so hard, trading is the hardest game in the world, trading is the hardest, all these people say it, and then they're struggling for 3, 4, 5 weeks in a row, can't figure out why. You've baked in a belief system that is going to crush you. Said you're giving mass value. Of course I am. That's literally what I do here. One day you guys will realize this is not just a trading stream. I'm not Raja 15 pip trader. I'm not fucking Daniel Savage just calling people out for no reason. I'm not fucking who else is live streams. I'm not like these fucking cucks that pretend to trade, but they really got somebody else calling their signals for them. I'm me. I've streamed for 48 hours straight, providing value, and I could have kept going. My only limitation was my physical condition. I'm going to show you guys something in this live streaming world that has never been seen. I will be the biggest live streamer in the Forex space, hands down. Of course, that starts with getting everybody money, right? If I just keep calling these banger trades, you guys take them, you make money. No more excuses about, oh, but I can't come to the summit because I don't have money. Get on the fucking stream but all on top of that, I'm going to show you guys this killer mindset. How was 2 years ago I started a podcast, and then 2 years later we have the biggest hallmark event in the Forex space. Spent $1 million, $1,061,000 on a weekend to bring the whole trading world together. Yes, we can do the impossible. You can do that. You can use trading to invest, to have capital, to do these crazy things. So I'm going to show you guys, this is going to be the greatest year of my life personally. I hope to have all of you guys along for the journey. I hope that you guys are genuinely paying attention to this stuff, not just sort of fucking, you know, okay, this is cool. You guys are just grid fucking your screen right now. You guys are just like, oh, yeah, I kind of agree with that point. But like really taking the shit I'm saying and trying to then practically apply it to your life so you can have those actionable results. That's what I hope for these streams and for our relationships for the next 6 months. And I really just pray that you guys stick along for the journey and make the best out of it with the most self-belief that you could possibly have. He said, all right, take it easy, y'all. He said, Roy, the GOAT. I'm not a GOAT. I fit the description. That's for damn sure. Ladies and gentlemen, take it easy. Happy to see you.